Welcome back. Talking with Cory Johnson, Chief Market Strategist at Epistrophe Capital Research. Looking at Alibaba, for example, with its AI spend today, now we're seeing this stock here up 8%. And as I was noting, this stock is now looking at the highest close since October of 2021. What do you think about the AI spending plans?
Well, it's pretty amazing that a company announces they're going to spend $53 billion and the stock goes up. Costs go up and the stock goes up. I think it shows the excitement of the notion of Alibaba joining in the AI parade here. But it will do so with significant constraints. Alibaba does not have the same tools available to it that the big companies in the US that are going into AI and with such great guns, and with even bigger guns, Microsoft, Amazon.com, Google, also with much bigger spending plans around AI and building out AI data centers. But, to think about what Alibaba is, it's an interesting combination of lots of different kind of US companies. And I think we have to think of here as kind of the Amazon Web Services model that is part of Alibaba now, and the notion that they'll be building out data centers all over the world. But it's going to be tough for them because they don't have the chips that everyone else has access to.
Well, we think about all the companies trying to get around NVIDIA, all things NVIDIA. I mean, Huawei started to fill the NVIDIA hole in China. Yeah. Maybe this move with Alibaba's spending, does that reduce their reliance on NVIDIA AI chips?
Well, they're not going to have a reliance on NVIDIA chips because they just can't get them. So at least certainly in China, they can't get them. Be curious what they do when they're talking about building out data centers in France and Brazil, and whether those countries will be given access. Alibaba will get access to NVIDIA chips in those places because they can't in China. So that'll be some challenges to the administration's ability to control where these NVIDIA chips goes. Of course, NVIDIA's told us they want to sell everything to everyone. It's good for their company. They think it's good for the world to be built on US standards. But fundamentally, if you can't build below 7 nanometers in size, because the equipment to build those things aren't there, Huawei can do all they want, and they certainly are. And indeed, Alibaba says they're going to develop their own chips, but they will be limited in that quality because they can't get the greatest equipment available from ASML in the Netherlands. Those are the tools that are used to build the best chips, whether they're coming from NVIDIA or they're coming from AMD. And without those chips, without the AMD, the MI300, or without the H100s from NVIDIA, it's going to be tough for them to build anything resembling those chips without the tools to do so.
We think about the cash flow, and we've seen some cash flow losses, but they're spending, and you said the stock went up. That shows excitement about what the AI landscape can look like for a company like this. But the stock, as I noted, is up over 100%. Does this have more growth? Can this help the bottom line of this company?
No one's looking at bottom lines anymore. Certainly no one's looking at a cash flow statement and free cash flow for these companies because of the investments that are required here. And it's kind of amazing to see. And there are hints in the air of a reckoning may come someday. I don't see the market really reacting to that notion right now. But this notion of companies spending more than they're making, even when they're vastly profitable. I mean, you looked at a really great quarter from Micron yesterday, and yet when they announced their CapEx spending, and it showed that they were spending so much more than some of the greatest profits they've ever had. Every single quarter they're spending even more. They really are building for a longer future here, which represents their excitement about the potential here. But certainly the returns are not there on a free cash flow basis, which is really the ultimate return in real returns on business.
So at this point now, when you think about names you like in the world of tech or AI leaders, because it's so competitive in generative AI and the monetization of AI, which we're not necessarily seeing in full force just yet, what names have the most potential in your opinion, and why?
Well, so what's really interesting here, and you and I have talked about this a lot over the last 6 months or so, is going beyond the semiconductor and looking what these build-outs look like, and looking at the companies that are doing data center build-outs, and we're seeing certainly the move in Oracle, stock that I own. It's my bias here. I report that fully. But when you look at how the kind of the build-out is getting into other businesses, we're also looking at now that we're seeing the data centers go from a reasonably small footprint to the scale up, to bigger and bigger footprints, to the scale out to wider and wider footprints. Things like networking have become really important here. So you look at the importance of whether it's the optical component companies or even the companies that historically have made things like routers, companies like Ciena and Cisco and others who are starting to build the equipment to connect these data centers to each other. Look at the move in Corning in recent months, a stock that I sadly do not own enough of, has had a fantastic run lately because the notion that they're going to need to connect these data centers as they scale out, as they expand over great distances, whether it's a local area they're going to or even moving connecting one data center to the next. I think we're going to see that as an emerging theme over the course of the next year or so.
Yeah, GLW Corning, I see a $93 price target from Citigroup today, and over 1 year up 80% basically,
Yeah.
so an incredible run there. When we think about those Mag 7 names, is there anything that worries you about the group?
I think the Mag 7 is a lot more different than people give it credit for. That Tesla is a very, very different company from, I don't know, from NVIDIA, and that Amazon is a very different company from Google. And there are certainly some overlaps there, but I think we're going to see differentiation. You've already seen that with Tesla, as that has fallen off comparatively in the moves in some of these other names. And I think that the notion of a Mag 7 as a singular entity has kind of fallen apart.
What about the Chinese stocks? I mean, when you see Alibaba here at 3-year highs, the other Chinese stocks, do they sort of jump on your radar?
You know, the accounting of Chinese stocks, accounting requirements of Chinese stocks, the ability to audit these companies, the responsibilities that these companies have towards their audits are all lesser. The risk in investing in Chinese stocks is so much greater because the disclosure is worse, the accounting is worse, the audits are worse, that I think investors can't look at these as kind of the same thing but in China, because it's just not. Your rights as an investor are not there. And when the tide goes out, these things could really be, we're going to see some real damage, I think, to investors, as we have seen in the past from equities linked to Chinese businesses.
All right, Cory Johnson, Chief Market Strategist at Epistrophe Capital Research. Thank you so much for joining us here on the show. Appreciate it.